A very good evening and a warm welcome to all of you in our today's VCM, organized by Strategy, Perspective Planning and Monitoring Committee of ICI on a very pertinent topic today, succession planning in CA firms. I am C. Shanu Goyal, Secretary SPPMC, and with me is CA Atul Kumar Gupta, Chairman SPPMC and past President ICAI. It's very common to hear or see reports of succession planning in business empires and big corporate entities. But for small CA firms, which are normally family-owned proprietorship firms, it's quite uncommon. We hope our today's VCM will enable you to introspect and give much deserved importance to succession planning in CA firms. We are fortunate to have learned speakers with us, CA Praveen Kumar and CA Vikas Kocherji, accompanied by CA Sushil Kumar Goyal, Vice Chairman SPPMC, to enlighten and deliberate on today's topic. I will now hand over the proceedings to CA Atul Kumar Gupta, Program Chairman, for taking the proceedings ahead. Over to you, sir.
Thank you, Shanuji. Very good evening, friends, and let me welcome all of you on behalf of the Institute of Chartered Accountants of India and the Strategy and Prospective Planning Committee. Friends, in this COVID pandemic situation, I pray the Almighty for the well-being of each one of you, and I believe that you are taking well care of yourself and the family, irrespective of the professional challenges, that last dates, the due dates, and so. I believe that you are taking well care of about yourself and all the colleagues associated with. Friends, normally we are organizing the programs on direct taxes, indirect taxes, GST, Companies Act, Ind AS, and a lot of other professional topics are there. But of late, and specifically, it was very painful moments in the COVID pandemic when we witnessed that I see that more than 300 chartered accountants lost their life. And even at times, they are the bread earner for the families. They were the sole proprietor. And then there was a question before all of us that what will happen with these firms when the proprietor is no more with us, unfortunately. There are other challenges as well when we see that the large number of firms are there in the profession who are practically the SMPs are there, the small and medium practitioners are there, as well as they are practically the proprietorship firm. If I give you the data, if you will be very surprised to know the data that when with the ICAI India, with the more than 88,000 firms registered with the ICAI, which is one of the largest, I will say, in the world, though we are the second largest professional body, but as far as the practicing firms which are registered with the ICAI, we are the largest base. You will be surprised to know that out of these 88,000 firms, the 65,000 firms are there who are running into the proprietor mode. Now, when we have the proprietorship of this much of a magnitude, and I'm aware the challenges which are there for the SMPs, because we all belongs to the SMPs per se, that the proprietor, how they started their ventures, their professional practice. There are the guys who are into the metro cities, comparatively easier. Comparatively, I'm using the word. It's not easy at all. But for the Mufsil town, it is even more difficult to start the practice. How the clients will come. So there is a hard-earned practice which is there. So let us say somebody started the practice in the age of 24, 25. And by the age of 60, 65, that you have devoted around 40 years in the profession, which is a hard-earned practice which is there. Now, when you have this kind of a practice is there, and with the aging factor which is coming on the way, there are the many challenges around these firms, specifically when the kids, so let us say X is there, so Praveen Kumarji, Vikas Kocherji is there with us, and they will be deliberating. But I give an example only that let us say Vikasji is there, and the Vikasji's son decided that, okay, I will not choose the CA profession, I will choose some other profession. Then what will happen? They will not be able to, somebody will not be able to qualify the CA examination because it is a very hardest net to crack. And then they get relocated themselves. So what is happening? The kids are getting relocated from a Mufsil town to some other towns. So there is always a challenge before a proprietor that in the times to come, who will take the practice to the next level? Who will be able to, how the succession planning will be there? In case Atul Gupta decided that, okay, from tomorrow I will not work, then who will take care of my practice? So this is a question which raised, which actually, I will say, created a question before me as a chairman of the prospective planning, that I requested the two eminent speakers that, okay, you have to come forward and guide that how we have to handle this kind of a situation. Now, friends, when I'm saying all this, that this is a problem statement, there are the many other problem statements as well. That when we are saying a proprietorship firm, not only that we have to speak about the succession planning, it's very important, because what is happening, that Parveenji and Vikash, you will agree with me, that when I nurtured a firm for 40 years, there is a very much, I will say, the love attached with that firm, that my emotions are attached with that firm. So it's very difficult that, okay, I will go into the partnership firm, or I see that the firm is going down. So after me, the firm, there will not be any survival of the firm. Then it's very, very, I will say, the painful for a proprietor, because that emotions are getting attached with the 40 years, 45 years I worked for a firm. Then I planted the seeds 40 years back. So now it's giving the fruit. And now, because of the my age factor or something, that I will not be able to survive, take the firm. That's a bit painful aspect. Then, my dear respected colleagues, which I wish to share and present before the speakers, that the second question will come, that in case I wish to go for a succession planning. The one way is that I will offer a partnership firm to somebody, that, okay, somebody will venture into the partnership firm, and then the partner will take care of the firms in the times to come. And I will be getting some kind of a sharing of the profit, or some kind of a royalty or something like that. So this is one way that somebody may think for. The another way is that, okay, I will do a kind of a takeovers, which is very much, I will say, in practice in UK and others, because one day shared me that this is a common practice, like a merger and acquisitions in the corporate world. There is a merger and acquisitions happening for the CPAs and CAs, professional firms as well, in the European countries. So can we think of, and in case I think of that, okay, let us have a merger, or let us have a takeover of a firm by somebody, so that I will be able to have a peaceful life, retired life in the times to come. Then what will be the challenges? So I discussed with Vikas one day, and he mentioned me that there will be the n number of challenges. Atul, I can tell you, for example, I discussed with him that a firm is there who is having, so let us say Parveenji is having a client with a 25 years of legacy. Is a kind of a, I will say, the Goodwill. So we have in the school time, we used to study the cat Goodwill, the dog Goodwill, and the rat Goodwill, wherein the cat belongs to the particular space. The dog Goodwill is attached with the owner, and the rat Goodwill is like it's always fluctuating. So in case it's a dog Goodwill, that, okay, somebody is getting attached with the chartered accountant in such a way that you have a very good fond relationship with the client, then how there will be a succession planning in that particular case? Because even if there will be a merger, there will be a takeover, the client whether will switch to the new chartered accountants or not. The another point is that in case it is there that there is a process oriented firm, we have inbuilt the process. So I wish that the Vikas Kocharji and Parveenji will be discussing the way forward in this particular aspect also, that how to develop the practice in such a way that the succession is easier. And the another point which I wish that Vikas specifically should speak on the valuation part, that in case I have a X turnover is there, I have this much of a client, then in case I'm looking for some kind of a planning in the advance, that, okay, there will be some kind of a valuations coming to me in terms of, because today, Vikas, Parveenji, you will agree with me that there is a buzzword called startups. So everybody is looking for the valuation of the startups, that, okay, this much of a good valuation is coming, venture capital is contributing. But we are not discussing our core subject, that, okay, the practice which we developed in 30 years, 40 years, 50 years, can that have a value? I can fetch some money or investors coming from there, coming into that? Yes, I'm aware that we have to take care of the code of ethics. We have to take care of all the legal metrics of the profession, that, okay, somebody is a non-chartered accountant cannot come into funding into the project. So that I'm not talking about that, okay, we will be coming out from that. No, within the legal framework, which is available given by the ICI, can we have something which is useful for my SMPs? So my heart beats for the SMPs. My heart, I have a very strong emotions for my proprietors and the small firms, that, okay, in this kind of a challenging environment and with the growing age, how we can have a very good succession planning by way of either a partnership or some acquisitions, mergers, valuations, all these things. So, friends, this is a good time that we have the two eminent speakers. I believe that this is the first program ever in the history that of the profession that we are having this session. So, I believe that our speakers are doing hard work to present before you something about the succession planning, and more we will be discussing, more the topic will mature, the concept will mature, and the ecosystem around this subject will get the maturity, and a lot of discussions will start happening around this. So friends, with this, I give the privilege to speak. So first ever speaker for the first ever program, CA Praveen Kumarji, that he will be speaking this topic. So everybody, because we are all new into this, and Praveenji put a lot of efforts around this. He is as Praveenji is a well-known personality. I should not be introducing as such to Praveenji, but I can tell you that the Praveenji is having a 30 years plus post-qualification experience. He is a partner of a large firm of the country, and he is also on the board of various organizations. He is on the committees of the ICI, so various committees of the ICI, including the topics like risk advisory, IFRS, and so on, even with the government, various committees of the government as well. He delivered, I believe, the thousands of programs at the different forums. And I believe that today's topic, he will do the, I will say it will be a cherished moment for all of us to discuss and start a deliberation on the, on and around the topic of a succession planning in the CA firms. And I request Praveenji that you please take care of this topic, and also please keep in mind the SMPs, the proprietorship into your mind, that, okay, as if you are a proprietor, as if you are having devoted 40 years into the practice, into the profession, and now there is a question before you that how to have a succession planning for my firm, with which I am so much emotionally attached with. So over to you, Praveenji, and then I will come to Vikasji for his deliberation, his part of deliberation. Over to you, Praveenji.
Thank you so much, Atul sir, for bringing this kind of topic into the forum, and I'm really grateful for giving me this opportunity to discuss some aspects. So first thing first, in 1990 January, when I qualified as a chartered accountant, I started my very, very small practice as proprietor of Kumar Praveen and Associates. Slowly and gradually, it has grown to some extent, so that I have the honor of, I have the honor of sitting with you and, sharing thoughts on how to discuss about, the various issues of planning as far as your firm is concerned. So thank you very much for giving this opportunity to share my thoughts with all of you, with the members, and especially the small and medium practitioners. Why I shared this with you is that, I am one of those people who are very close to your heart. So started very, very small, absolutely tiny. My office was 6 by 6 in Karol Bagh area. And today we have, decent number of people working and decent number of branches. So when we had a discussion, around this topic, so I was wondering that, the concept which we thought in our firm, about succession planning, and so that's a very small, tiny part. But in order to build up to that, it will require a kind of prepare the mind of people on how to reach to that level, on, creating that kind of firm which will have a value in the market and which will require the next generation to take over. So I have prepared, we were discussing the topic. So Atulji, you had mentioned that one topic is challenges in succession planning. And I was thinking in my mind that while Kochar Saab is taking challenges in succession planning, in my mind, the issue was challenges in preparing the presentation for this topic. So I was building up to the presentation, and then I thought that maybe I can share some experience with all of the members, because in 30 years, what we have we have implemented, we learned, maybe some portion, I will put that into a presentation, and then we will build up to that level. That when I talk about succession planning, and when Kochar Saab speaks about the valuation and the challenges, then these are all on the back of your mind, that these all activities. So
just to share with you, the Kochar sir will be speaking about that when somebody is looking for the succession, maybe through the acquisitions or through the mergers, what kind of a challenges normally a SMP is facing, and how to prepare yourself 10 years in advance. So I discussed with him that, okay, 10 years in advance, so that when you are reaching to the age that, okay, you are looking for a succession planning, it should be a smooth planning with the good valuation, how to arrive the valuation. So I believe that it will be a unique combination when both of you will be speaking.
So that is on the back of my mind, and absolutely the same. Thank you so much, Atulji, for clarifying. This is exactly what was on back of my mind when I was preparing. So these are not many slides. Most of the slides will have some decent optics, but it is more of creating a momentum towards the discussion. So around these are only 25 slides, and I don't think I'll take more than half an hour to talk about it. So and then after that, maybe Vikas Kocharji can take us through the other details, and then we can have question and answer. And I believe that as we will talk, this particular topic will get matured, and we will have a lot of discussions around the topic which we are discussing. So my presentation is broadly divided into three parts. One is the vision, how we are looking at our firm, like Atulji said, that 10 years from now, or maybe 20 years or 30 years from now, how we do manage the firm so that our value is getting created. When we are looking at succession or looking at mergers or looking at, selling it off, how the value will be created in this firm. And then succession in terms of when we are getting a retirement age. Although it is mentioned everywhere that, CAs, they don't retire. So, but still there is an age to which, up to which we should be working actively. And then we should leave the space for a younger generation to take over. So these are the broad parameters on broad bifurcation of my slides. So, so frankly, I'll straight away come to the point, because I had collected some data, but I think Atulji has already shared that data with all of you. And we can, we all know that the large number of firms in our country are either proprietorship firms. And if we add 2 or 3 partners firm into that, then that becomes a major chunk, very, very major chunk. And very few firms, they are having more than 10 partners, very, very few firms. But frankly, let's be honest about it. There are 2 kinds of model which are working in India. And I'll be very, very upfront with you, because, we are speaking to the colleagues only. One model is where, people get together. They say that, okay, we will have our own offices. We will earn our own thing and our own revenue, and we will spend our own money. But we will use the firm as a partnership, and we will try to bid for bigger jobs, especially the bank audits or the government jobs. And sometimes people get together in the same office. They say that, okay, we will share the cost, but we will run our own businesses. So it is basically 2 or 3 businesses running under the same umbrella, or 3 or 4 or 5 businesses running under the same name at different locations. That's very, very popular model here in our country. The second model of CA firms is what is called a real-time partnership firm, where you will have only one bank account, and all the partners, they will do a profit sharing. So this kind of model is not very, very popular in our country. And the first model is more prominent. But as Atulji has mentioned, that many people, and this is what I have also experienced, that when we qualified there was a dream that I want to be a professional. I want to run my own business. I want to, do my own practice, and I will not be doing any kind of a job. So everybody looks at the profession in such a manner that, okay, now they have cleared this one of the most difficult examination on this planet called Earth. Now they've got a certificate of practice. They will have authority to sign off the balance sheets as auditors, and now they will be able to run their own profession. So once you start doing it, it takes time to build up the practice. We have as natural, the style of our profession, we are not trained in doing any kind of marketing. We are not supposed to do any advertisement. We are not. So our mind is trained that, okay, we are professionals. So that means we have our own dignity, and people will come to us and will get their audits done, or will get their get professional support from us. Now the challenge comes that once you start your operations, where from you will get your first work. So you will need to have your own contacts or your own people. So that's why, people, they get onto the first model when they say that, okay, I am running my own, you are running your own business, but let's get onto a firm name, and we will, we will have a strength as far as, eyes of the regulators are concerned. So large number of small and medium practices, they are in the first model. And when I am discussing, the areas, how can we create value in the firm, I think those are addressing those SMPs primarily. This presentation is primarily for those practices only. So when you are having your own firm, a small firm or a medium-sized firm, small and medium practitioner, whether you are in metro cities or whether you are in smaller cities or towns, I think it is important to understand that we are running a business. We are running a profession, and there are various aspects of this profession, of this business. So we are there to earn money out of it. Of course, we will be selling our time, and we will be contributing to the society by the knowledge which we have gained. But ultimately, in lieu of sharing that knowledge, we will be earning money out of it. And there are different aspects of any business. There are many management functions. For example, how do we manage our offices? Everyone, when they open their office, they will have their administration work, they will have their billing, they will have their collection, monitoring mechanism, they will have their own. So these functions, which are management functions, can be broadly divided into various categories. And here are some examples that you can have: administration or office management on one side. Technical development is very, very critical for people like us who are professionals and who are chartered accountants, because we need to remain updated about whatever changes are happening, whether we are functioning in one area or we are working in various areas, whether it is GST or whether it is income tax, whether it is company law, whether it is auditing, whichever area we are working in, we need to remain updated about the technical aspects. Technology is playing an important role here nowadays, and you need to have, so this is also one of the aspects of segregation of the management function. How do you manage your EDP? Then how do you manage your HR? For any CA firm, having people is one of the most critical aspect, and that is the primary cost which we incur. So having a robust system of HR is very critical. Then, of course, you manage your finances. This is, this is one area for which you are working. You are working so that, you are able to meet your needs, and also you can, save for your contingencies. Then corporate communication, website, images, the way you are projecting yourself. And then recreation is also an important part. So these are simple examples. These are some examples through which you can, you can divide your management functions. One thing which is very, very critical, and when I qualified CA and I went to a senior person to take guidance, that, sir, what should I do? I want to run my own practice. The only guidance which was given to me was that, please remember, your time is everything which you have. You are going and selling time in the market. So wherever you are going with a bucket of apples, which is called time. So if you are spending time on something, you should earn your reward should be compensating the time which you are spending. So it is like he mentioned that it is, you compare it with like a car dealer. So if somebody is taking car from that dealer, that person is paying money. So we as professionals, we are selling our time. So time for us is everything. So, we were having kind of a conference, a seminar, and I was discussing this time related matter. So one person stood up and said, sir, you are doing a kind of, it's a very theoretical thing. In our town, people are aware that I am a CA. And whenever I go to somebody's function or birthday function, the person standing next to me will ask me whether, whether the capital gain tax, or I want to invest in this and can I save time and all. Can I save tax, or, they start taking advice, and we cannot say no, because it's a social gathering and we are a small town. We know everyone, knows everyone. So the crux of that discussion was when I told him this story, that one of the very, very famous lawyer, he was traveling in the aeroplane, and the person next to him, just came to know that, oh, he's such a big lawyer. And he started talking that, okay, we have a 2 hours journey, and he started talking about some kind of dispute which was going through. And this lawyer very diligently answered all his questions, and they exchanged cards. And after 2 days, this gentleman received a bill of spending 2 hours of advice of that senior lawyer. I think most of you might have heard this story, but this is valuing your own time. So the senior person to whom I had gone for guidance, he told me that you should value your time. It's not when people will value your time. It is you, when you will understand what is the value of your time, then only others will be able to understand. So this was the basic theme from where I started my practice as one man show. And I realized that the time I'm spending on each assignment, this is critical for me to understand what I'm earning out of it. And the functions which I shared with you, whether it is technical development, whether it is HR related matters, whether it is, office management or EDP, everything is there so that my time is saved. So when we say that, okay, as a CA, we need to have a technical development and we need to keep our knowledge enhanced all throughout, then there are 3 aspects which are towards this. One is that you need to have, in case you are running a firm, you must have these 3 aspects in your firm on technical side. You should understand that there is an importance of knowledge session. How do you manage that knowledge? And how do you disseminate that knowledge to your team members who are going in the field to do the work? I'll share these points with you. So we started having, Friday morning class when we were only, we had just started our practice. We said that every Friday, the office will start 45 minutes early and there will be a Friday morning class. So nowadays we have changed the name. We said that, okay, it is called Thank God It's Friday. So every Friday morning, there is a technical class in the morning. And it used to happen. And the interesting thing was when we grew and when people, started joining us, every Friday we were having these sessions. We started inviting experts. So we invited Atul sir sometimes some other, ASB chairman, sometimes Nakas chairman. We started calling these people to share their thoughts with our team members. And those seniors were always ready to, share those thoughts with us. So having those sessions were really, it had become a landmark or a benchmark for us. So we started inviting these experts, and then sometimes we had joint sessions. So we know that we are good in auditing, but probably we are not very good in legal side. So we joined hands with the law firms and said that, okay, we will have a joint session with you. so that you can share those knowledge, what is your side of the tax is and what is our side of the tax on accounting side. And then sometimes we used to have soft skills, how to have a better communication, how to write the reports, how to speak to the client, how to ask for your fees. I mean, these are small little things, but it makes a lot of difference. We made compulsory for everyone to be in a proper attire when they are in the office or when they are at a client location. And these sometimes very in-depth technical sessions, we used to call people, so, the faculties of the institute, so that please explain, GST is coming, how it is going to change our lives. So we used to call people and they used to spend 2-3 hours with us to explain that, okay, this is the concept and this is how the changes are happening. So these knowledge sessions are very critical. You cannot say that I am running a proprietorship firm and I have got only 4 articles or 5 articles with me. I don't need this. You need this. We all need this, because until and unless we are a computer, which, whatever is published, we have all the, data inside our mind. We need these knowledge enhancements. So we need to have that knowledge session, but it doesn't stop there. When you will invite experts and when you will have those kind of knowledge session, you will need to preserve also. You will need to have, those articles which you have written or published or which you liked. You need to preserve that in somewhere. Maybe if you are having an office server, some portion should be allocated to your knowledge management, where you will keep your e-files, you will keep your articles and key advice which you have received, or white papers which you release, or maybe the library. Nowadays, in the beginning, when we started, Atulji, and we started our career, there used to be small books, and those books used to enhance, and the full almirah of library was, need of the hour. And we used to go deep into which year, which ATR, which CTR. But nowadays, it's very easy. You can just open on, log in onto your, library, e-library, and you will get the case details. But it is very important for you to have a very quick turnaround of the knowledge, the papers which you have collected or which you have. So it doesn't stop there. You have to have a constant flow towards your team members and your partners who are coming new to your practice. So if you are a proprietor, you really want your firm to grow, and you have handled a case, you have done an audit which is very technical audit, and you took a view and you have written some notes. It is important to tell it to somebody who will go and do the audit in the next year. Or if you have handled a particular case, it is very important for you to note down whatever you have carried out. So you will be able to publish those articles. And I remember when we were discussing with the institute, very few people, they are able to write and contribute their articles to the institute journal. But those people who do, they really, they get enriched, because A, their name becomes popular. And second, people are able to see that this person carries an expertise in this area. And then, constant flow. How do you make people aware that there is a change which has happened? The news flash, technical update letter, business bulletin. You can give many names to the publication which you are going to have. Even if you are a small firm, you can have a set of 200 clients. You can send that information constantly to them. And nowadays it is easy. You don't need to print out and send those couriers. You can just do a designing, put it on email and keep sending to them. And you might be receiving quite a few of them from our seniors. So, and then there are examples, that technical updates, but very, very important is documentation part. Like, you can have a format that, okay, this is office memo number 1. This was the issue, which we handled in this, and this was the technical topic. This is how the view was taken. So you can also write down and document in minutes whatever discussion happened in your internal meetings, in your subcommittee meetings, in your partners meeting, you need to keep a format of documenting those. And I remember, when I started doing this practice and I went for a bank audit, the bank manager, they very proudly, they brought in one file which said circular number 1, circular number 2, circular number 3, and they shown us that, okay, this is how it was done. So that was how the banks, they documented the whole thing. And we started implementing that, okay, we will also have a, some kind of a documentation. A pattern can be done. It can be decided by you. Now, moving on to the HR area, I was reading this particular quote and I realized that a bad job with the good boss is better than a good job with a bad boss. So nowadays, if you really look at the position in India, there is a dearth of intelligent people out there. Everybody needs qualified CAs. And CA as a professional, we are really, really in demand. You look at the smaller firms. If I, discuss with anybody, in the town or even in metro cities, I will say, what is your main challenge? So apart from your clients and work, they say that we are not able to hold on to the people. People don't stay. So why don't they stay? Because they need to see their career and they want a good boss. Now we will see what is the good boss and what is the good job. Good job, everybody will understand it's what is giving you higher amount of salaries. But those people who are earning nice kind of salaries, they also keep on jumping. And attrition rate in the market is around 23-24%. I mean, out of 100 people, 24 will leave. And more because there is a lot of demand from BPOs, from the foreign companies which are working in India. They need qualified CAs. So it becomes a very challenging thing. But for you who are running these practices, please remember that, many times you don't need only a degree wala people. You need people with, a great attitude. They need to have an aptitude and attitude to really make their career. So many times the person may be only semi-qualified person, but that person might be fantastic in your audits. So that person is like a partner to you. And now, with the institute opening up the partnership for, other professions also along with CAs, I think you can also look into other professional bodies and look into the people who have great attitude. So how do you, nurture these people? So one is, of course, when you do the hiring, they will be demanding some remuneration, which should be matching with their what they are going to fetch in the market. But more important is their connect. How do you orient them? What is the kind of appraisal process? And what do you demonstrate when they exit your firm? So these are all critical areas in your HR function. And this is what will decide whether your firm is known, a better known firm, or it's just run-of-the-mill firm. So when you invite person, when they come, to the firm on the first day, what happens? Whether they're, whether they are welcome in the office, or when they join in, you say, okay, go to that client. There's an audit happening. So there has to be a proper respect for the person who is joining you as a professional. And I'm talking not only about the qualified people you are going to hire, I'm also talking about the article clerks and other interns or semi-qualified people. Whosoever, so this is what we make sure that the person, when they enter, there is detailed line with the reception already. That, okay, this person is going to come at 9:30 in the morning, and that person's visiting card and email is already prepared. 2 hours that person will spend with the orientation HR team, and there will be a welcome kit kind of, the laptop and desk where he's going to, she's going to sit. All these things are ready. So first day becomes very important because that will give an impression of what kind of organization you have, and that will set the tone. if you are having a slightly larger practice, slightly larger, small and medium, so I would put it in medium. That means a person joining and somebody else is there who will be working as their buddy for 3 months. And they will help you, help this new person to settle into the culture and support in managing in case that person has some other perception. So they will, resolve those conflicts. And then the person may have some questions and answers. So what we do is we also have training for professional staff, which I saw that happening in large number of medium-sized firms. So basically, when people join you, they need to be when I joined my as an article, my senior person took me with him, asked him to sit down, and he told me that I should put the tick when I am doing. Tick should be like this and not like this. So interaction was supposed to be, it is supposed to be done. And these are all going to add value to the organizations. And then, of course, you will be able to demonstrate how the ethical values are maintained in the office and how things are done in this office. So critical part when you are running a professional firm is doing your risk management. You need to protect the firm. You need to know what is your risk appetite, whether you can manage the risk which you are taking. So many times, I have seen that senior chartered accountants firm. So when you go to them that, okay, we want to get this work done, they will say, no, we do not take this kind of assignment. Why? It's not that they do not like to have more money. It's because they feel that it's too risky. So I have made this principle that we need to know what we should have and what we should not have. There are certain areas which are beyond your capacity. So it is fair to say no, because what is at stake? I think reputation is one of the most important thing which is at stake. With new regulators coming and, you have seen what has happened in the market. The regulations are changing and the regulator is becoming more and more tough. And the perception of society is also increasing, demand of what they perceive, what auditors have done, and expectation from society at large, society's perception and expectation from the professional that is increasing. So our reputation is at risk. You know what happens, when, the head of the country stands on a platform and speaks certain words, they are being heard by everybody around. And the impact and the ripple effect and the ripple effect of those, that reflected in the regulations which are becoming and the kind of things. So it is very important for you to understand that reputation risk is very, very important risk, very significant risk. You may say that, okay, I'm running a small practice. How does it matter? But please remember, for people who are interacting with you, you are representing an institution. You are representing a fraternity. Whatever one CA is doing, it is perceived that all other CAs are also doing the same thing. So you need to keep that in mind when you are working in a small and medium practitioner. As a small and medium practitioner, please remember that whatever you are doing, the society is watching. So we need to protect that. And it is not somebody else's responsibility. It is not the responsibility of the institute. It is a responsibility of each one of us to take care of the reputation which we are going to make in the market. But there are other risks also. If you end up doing something which may have may have some kind of implication in future, your assets will be at risk, because ultimately you are a proprietor or a partner. So you remain, the liability remain unlimited. So it's very, very critical for you to remember that all the time when you are into practice and your people. So if you are doing something, which can have a risk that your people will go away. So you need to be careful. You need to be aware that what is my risk appetite. So standardize, it is very important for you to standardize your client servicing. Like I mentioned, what is not your business is more important than knowing what is your business. So I repeat again, and I think if out of the whole session today, if you want to take away one thing, you must know what is not your business and what is critical for you to say no. So many times people, when the large companies or listed companies or, those big organizations, they approach you and they say that you please carry out our audits, but we do not have budget for the fees and all. You should know whether you are capacitated to carry out that kind of assignment or not. And if not, please say no. There is no harm. It's easier said than done. I know, because you will say that we already have very limited opportunity. And if a client is coming, how can I say no? But boss, the client has come for some unethical work. How can you say yes? It is not. So it is very critical for you to know what is not your business. And you can decide which area you want to be expert in. You want to be good in audits? Fine. You need to read auditing standards. You need to read company law. You need to read, different standards, IFRS, Ind AS, all those kind of stuff. You want to be good in taxation? Fine. Income tax, good. You learn all the new tools, the new, the things which are coming out. And GST, every segment is a different segment altogether. You need to decide which areas you want to be expert in. And if you want to be expert in risk advisory, you want to be expert in internal audit, you need to have your report formats which are standardized. You want to give a snapshot of the compliances, you can give them flow charts, you can give them description, you can give them, bird's eye view of the observations. But you need to have those kind of standardization. And these are my last two slides. One is that please remember that if a door is closed, it's because what was behind you, it wasn't meant for you. And I'm very firm believer of this philosophy that if I am capable, I will certainly get something which I deserve. And if something is not coming to me, I need to be careful. I need to chill out. It is fine. You have qualified CA, so you will not be starving. You will be getting a job, or you will be getting an assignment, or you will be getting a direct assignment or kind of work. So please chill out, spend time with your family, and also please manage your financials, in such a manner that you should know that your worldwide, there are three kinds of portions of your revenue. One is, so if you are earning 100, you should know that your limit of spending HR is direct cost is 33%, 1/3. That includes your cost also. The discussion we had over the time is your money. So this is your HR cost. Second, 1/3 is your indirect cost. You are having an air conditioner, you are having your computers, you are having an office, everything has got a value. So there is an indirect cost. And 1/3 should be your profit. So if you're spending time and a person is bothering you for his, not bothering you, no. If a person has come to you to take support in filing their tax return, please remember you are spending time. You have created infrastructure for that, and you'll be spending time on that, filling up that utility and all. But 1/3 after spending, so 1/3 is your profit also. So please remember that you need to manage your finances accordingly. And last and the most important thing, identify what should be your retirement age. So we keep it 65. Everybody who will be attaining 65 will need to retire. And this is something which I think Mr. Kocher will also discuss. When you will start doing a merger, you will need to give respect to the fact that people who are called chartered accountant, they also need time for their own recreation. So they will need to, they will have their limitation. Of course, they can work as consultant or other, but they need to hand it over to the next generation. And for that, you will have, you need to identify that at least 3 years before. I will identify these 2 people out of which I'll hand it over to my to this person. If my own son or daughter is ready, even then you need to have succession planning, and then plan your job costing and get rid of those low-paying jobs. Everybody who comes and sits in your office to have a cup of tea with you and who invites you on the birthday of their children, you appear that he's very close to you and he's the biggest buddy of yours. But please remember that if that person is having a dealership of a car, when you will go and buy the car, that person will be charging cost from you. So you are spending time. So you need to plan that how much time you are spending on that particular client, and then pass on your contacts to the new generation, the young generation, time to time, and let them have the freedom of doing work as per what is your culture which you are developing. And please remember, communication is the key. That ultimately what you communicate to your team members, that's critical, and what these people are communicating to you verbally or through their gestures, that is also, whether it is client, you will understand when the client's tone is right or not, right? You should also understand when your team member or your partner or your that person, what tone that person is speaking and whether he's trying to communicate something to you or not. So you should be sensitive to the need of your partners. It is very, very critical. So question your contribution to the firm, and this question you should be asking every day. So friends, this is how we create value, and this is how we do planning. So we look into various aspects of our business, whether we are a one-man show or 2-man or 3 persons. So we need to understand that whatever firm we are creating, there has to be a value added to it every day. And over the years, when you're 10 years or 20 years from now, you should be in a position to be proud of what you have created as an organization. So with this, I thank you very much. I hope I did not overshoot the time, and I hand it over to Atulji for next proceeding. Thank you so much. I hope it was useful for all of you.
Thank you, Parveenji. And I believe that this is one side of the story, that in case you are starting a firm or running just initiated a proprietorship firm, how to grow the firm so that it will be easier to have the succession planning in such a way that you will be able to attract your kids, that, okay, they will continue your firm only, apart from you are having the partners and building a firm. So I believe that this is the way, that a gentle way that the Parveenji tried to convey, that it's very important that to grow the firm in case you are looking for a succession planning, because unless and until you will not grow, it will be very difficult to retain not only the employees, but also even your own kids into the firm which you have established way back. And that's the, I will say it's a truth. And though it is a bitter truth that even they will be looking for their career, in case the father or mother is running a firm over a period of 30 years, 40 years, still they will be looking. By and large, I will say it's not the exceptions are always there, and the good exceptions are there. And I believe that they should respect the parents, that, okay, how much they have contributed and how they have built the firm. But nevertheless, and I believe that it's good way, that I believe that the capacity building, I will say the right word is, Parveenji, your presentation is the capacity building is the key of having the good succession planning in the firm. But there is another story, there is another challenge, which I believe Vikasji will be discussing, that I will not be able to do the capacity building. And now the question is that how I will be able to. So my age is not giving me the that kind of a comfort, and I wish to, and there are the unfortunate situations as well. So in that kind of a situation, what are the challenges the CA firms are facing? What should they plan in advance? What will be the valuation process? And what kind of, I will say that even X, say for example, the X is approaching to Y and to acquire the firm, then what kind of a X will see, what X will try to see in the firm Y, for the acquisition, and why should prepare himself or herself so that there will be a smooth succession planning as I discussed with you, that in case of a venture funds, today we see the startups are getting a lot of valuations. There is a firm, there is a venture, there is entrepreneurship, which I established 30 years, 40 years back. So what is the valuation for me in the profession is something, a big question before each one of us. So I believe that Vikasji, you will be touching that aspect into your deliberation and giving a valuable guidance to the members who are viewing this program. I can tell you there are more than 3,000 chartered accountants who are viewing this program live right now. So they are looking towards you to guide them. Over to you, Vikasji. Vikasji, just to share with you, Vikasji is again a very, very senior chartered accountant and having more than, I will say, more than 30 years experience. And I'm aware that he is a very passionate person, having a good command over the things that, okay, what is perspective, what is planning, and how we have to do the things. He is a consultant of a various large organizations. But again, from the heart, he is again a very, I will say the SMP only. And that's why we requested him to speak. So Vikasji, please guide the members that if I will not able to do this all what Parveenji is mentioning, what I should do.
Thank you, Atulji. Thank you very much. And thank you, Parveenji, for breaking the ice, if I may say so, by taking the ownership of doing the first part of the seminar. In any kind of topic like succession planning, which Atulji has just mentioned, this is the first time that the Institute has planned something like this, and Atulji has taken the baton to run this program. Breaking the ice is the toughest thing, and Parveenji, you've done for that for us. So thank you very much for doing that for us. Yeah. Now, let us first try and understand what is succession planning. Succession planning is basically if you are running a small proprietary concern, or if you are running a small partnership with 2 or 3 partners, then how do you transit the ownership from that proprietary concern or that partnership concern to another venture, another entity, another person, another CA firm, etc. Now, how can these happen? These can happen under different circumstances. It usually occurs, and as Atulji said, it's about 65,000 practicing CAs are in proprietary, they are sole proprietors. So what will happen with them is that there will be a time when the proprietors feel that they need to move on with life, and as Parveenji said, that either retire or pursue other passion of life or whatever be the case, they need to move on. And when they decide to move on, then the question will come of what do they do with something that they have built over a period of 30, 40, 50 years, as the case may be. There could be other time where there could be unavoidable circumstances or unavoidable reasons why the proprietary concern that you have created or the firm that you are part of, you need to move on with. And this could be for multiple reasons. In some cases, you will also find that succession planning is important by way of merger, as Atulji has just mentioned, for reason that one set of proprietor or a small firm sees a value for themselves by finding ways to become part of a larger firm, or finding 2 like-minded or 3 like-minded proprietors coming together and saying that let us merge. And that merger can happen for different reasons, that transitioning is one of them, not wanting to lose your identity if you have created something, and not having any successor in the family, or whatever be the case. There are multiple reasons why that can happen. And in some cases and some parts of the world, these are also known as replacement planning. Now let's go into the question of why is succession planning needed? The firm or the small proprietary concern that you've been running, you are the sole decision maker, or you are a small firm and the partners are the sole decision maker. So therefore, and thus, you will find over a period of time that for smooth running of your practice, for smooth running of your business, you need to bring in younger, capable, stronger willed people into the practice who can take decisions, who can take faster decisions, because today we are living in a very, very different world. The expectation of our clients, the expectation of people that we provide services to, the turnaround time that is expected from us is increasingly going in a direction where you need to be up to speed in terms of what services you're providing, what capabilities you have, and therefore, and thus you might feel that you need to bring in people who have that ability to deliver in a much faster environment that we live in. The other reason why you could be looking at succession planning is there could be a liquidity requirement. You may be wanting that you have created a firm or a proprietary concern that you ran for a period of time. And as Atulji mentioned, I mean, we keep reading about the startup ecosystem, we keep reading about the billion-dollar valuations, etc., unicorns, decacorns, whatever we keep hearing. We as CA firms never have delved into our own liquidity event. There'll be very few and far between CA firms or proprietors or small-time practitioners who've looked at monetizing their practice, so to say. Long-term clients are also very, very important from our small firm and the small practices that we have. And these long-term clients generally, since the relationship has been built with you, do not want to just move the files elsewhere. So you need to get in the process of training the younger one or whoever you have decided to either merge your practice or sell your practice or bring in fresh blood, where the transition of your clients can happen. We would have seen in our careers that there were many large, small, medium CA firms who had a lot of brand value for themselves and who we have grown up during our articleship period and otherwise. They seem to wither away or just move away or die with time. There are few firms and there are few proprietors who would love to retain their legacy. I mean, I would want that the firm that I've created, nurtured for 40 years, does not get wither away, but the legacy of the firm continues. And for the legacy of the firm to continue, succession planning becomes very, very important. Also, when age catches up with sole proprietors and with partners who are 2-3 partners and they're all aging, the employees also, if they do not see action at the proprietary or the partners level, the employees will wonder that maybe the proprietor that is running the firm or the partners that are running the firm are slowing down in terms of the time that they're putting, are slowing down in terms of the intensity of what they are putting on the table. And therefore, and thus, the stability of the employee gets little wishy-washy if they start seeing that. So you need to ensure that if you have long-term employees with you in the firm and you have long-term employees who've been with you for a period of time, that you somehow find ways to ensure that they see stability even when you are aging and you are deciding to retire or you're deciding to do something else in life, and that be the case. Succession planning is also important when you want to do economies of scale. In today's fast-changing world, where a lot of technology-driven work is happening, there is a lot of technology being used, not just elsewhere and that we see in our life. Half our life is on apps, but even in the CA firms, technology adoption is getting very, very important, and technology adoption is becoming a very costly exercise for small and medium firms. And therefore, the inability for small firms to spend on technology or partnership, small proprietary concerns, the inability to spend on technology or on upgradation of technology will at some time find that it is becoming a hindrance in terms of rendering service, in terms of retaining clients, also in terms of finding talent and retaining talent. So all these are different reasons why succession planning is important. Now, how do you plan what you want to do? The fundamental thing is that if you are deciding to do a succession of your proprietary concern or of your partnership concern, it is critical that the procedures and processes that your firm has or your proprietary concern has is documented, so that the person who is coming in as a successor to your practice or to your proprietary concern does not need to reinvent the wheel. He will have established, written, documented processes available with him. It is one thing to have documented process and procedures. It's another thing to ensure that the compliance of the same is happening. So you may have the best processes and procedures documented. Please ensure that the compliance of that is happening, because, and I will come a little later to that, is that when you are doing succession planning via the mode of monetization, the entity or the firm or the individual who's looking at acquiring your firm or practice or business or profession will do a complete audit of that. So even though we are auditors and we do a lot for the others, please remember that the guy who's going to be your successor will audit of what you bring on the table. The roles and responsibilities of your key employees need to be well documented. There should be a clear-cut demarcation in terms of which senior person is doing what in your organization. In small proprietary concerns and partnership concerns, you may have resources who are doing multiple things at the same time. Even if they are doing multiple things at the same time, or they're handling multiple clients, and they're also, some employees or some senior key members are doing the direct tax and they're doing indirect tax work, and also during a lean period of tax practice, they are also doing some kind of audit work. Please document that, so the guy who is coming in to take over your business or practice knows the roles and responsibilities of the key employees that he's going to get along with him. As far as possible, the proprietary concerns and partnership concerns should document the contracts that they have. Please bear in mind that, and again, I will go back to the monetization of your practice. Please bear in mind that whoever is coming in to buy your firm out, to buy your practice out, or even otherwise, if you have decided that the firm needs to be passed on to some senior person within the organization or within the family, your contracts with your clients and the renewals have to be documented so that they know what is the revenue stream that is running into the firm. Whenever you're doing succession planning, you need to ensure that segmentation of your accounts and your billing is well done. You need to ensure that you know what is your revenues from audit, statutory tax, internal, whatever be. What is your revenue from tax, direct, indirect, GST, etc. What is your revenue from consulting, whether it is tax consulting or business advisory or whatever it is. If you are in the business of process outsourcing, small kind of outsourcing work that you're doing, then you need to know what is your revenue from your domestic outsourcing, international outsourcing, whatever be the case. And all this has to sit in a larger umbrella of knowing what is your recurring revenue and what is your non-recurring revenue. For any kind of monetization of your practice, this will be one of the key things that the person who's coming in to acquire your practice or to buy out your practice is that he will want to know what is your recurring revenue and what is your non-recurring revenue. You will have, even if you are running a small firm, you will still have some kind of spend on IT, you will have some kind of data security, you will have some kind of spend on software. You may have a tally program with you, you may have ETDS filing packages with you, whatever you may have, 3, 4, 5 laptops, desktops, whatever it is. You may have the concept of a server where your main data is maintained and the employees are getting access into that server. Whatever be the process that you follow and what are the procedures that you follow, please make sure that these are documented. You must also have documents of your employees, the employee file, what are the retention strategies, etc., etc. All that need to be documented. And I will, at the cost of repeating myself, I will keep saying that when we are looking at monetization, these are some of the areas that the acquirer will definitely want to do. Now, what are the issues that the sole proprietor faces? One issue, and as Praveen had mentioned, that he's probably reaching an age in time where he wants to retire and he does not have the capacity or the willingness or the wherewithal to put in that extra time. He does not want to take pressure, etc., etc. There could be cases of motivation. His children, as Atulji has mentioned, his children decided to pursue something else in life. He does not see visibility at the end of the tunnel. And he says that, what am I doing? And I've done enough 30, 40, 50 years and I need to do now just move on or wind out. Another area of serious concern today is attracting talent and retaining talent. There is an acute shortage of talent in this country in different spheres, whether you look, I mean, you would have heard or read in the papers that even the largest software and IT companies have an attrition rate of 30-35% today. So attracting and retaining talent is very difficult. And as the larger fish in the river or in the pond eats the smaller fish, the smaller firms and the smaller sole proprietors will find it that much more tough to find talent, retain talent. And once you don't have talent, the motivation and the ability to put your time to run the practice diminishes. Then there is regulatory and compliance pressure that we have. There is immense amount of changes that are coming in terms of what is expected or not expected of our profession. We have to be completely up to speed. Some may find it easier to do it. Some may find it who are at different stages of the life that I don't want to take the headache of doing this. Let me find somewhere else to get out of this and do something else in life. Skill development is another thing, that how do you ensure that that the talent that you have within your team is adequately retrained and reskilled, because there are enough and more opportunities in the market and in our profession where these resources will want skill development, they would want to upgrade their quality, they would want to upgrade their ability to learn more, and they will find pastures in different firms or in larger organizations. So these sole proprietary concerns have a very, very tough time in trying to retain talent and to do skill development. Maybe also what happens, and we found in fair amount of proprietary concerns where the clients are becoming increasingly large and they're starting to doing well, the expectations of the clients increase. And the expectations may or may not be able to be matched by the proprietary or the small firms. It can get very, very tough or tricky at times. And as I mentioned earlier, technology is playing a very key part in our profession today. We may or may not have the ability to spend on that technology. Also, we will find that there are proprietary concerns in small firms where the family, let's say the children of the proprietors have settled somewhere else, maybe in different part of the country or overseas, and the proprietor feels that time has come for them to maybe look at relocation and moving on with the children. Now, all these are reasons that the sole proprietary concerns will face or are facing. Some of you may be facing, or some of you may be mulling in your mind that this is what is happening and what do we do next. In the olden days, what happened is that the firms or the proprietary concerns used to wind themselves down. They would find the right talent within their organization who they could pass some files with or to, or they could have some friends that they will pass the files to, or in extreme cases, they will go and tell the client that, we are kind of winding down and maybe request you to take your file, find another CA. And that becomes a big challenge because the relationship with the client has been developed over 30, 40, 50 years, and it's not a very easy task to do that. However, that needs to be done for the betterment of the client, because it is better to tell them in advance rather than them finding out one fine day that you are not doing your practice. Now, once you've decided that you need to do succession planning, what is the key thing that you need to do in terms of finding a successor? And as Praveenji mentioned, the key to any CA firm is the quality of resources that you have. I mean, any firm or any proprietary concern is only as good as the talent they have in their firm or in their proprietary concern. So when you're finding the successor, you will need to understand that will the employees of my entity accept the successor? Does he have the same mindset that I have? Does he bring in the same values that we were working with? Is he going to take the firm in the direction that we are already going to? How would he tackle the problem in my absence? Will he take the steps that I have been taking, or will he take the steps which are radically different? If they're radically different, it might affect the employees, it might affect the clients, etc., etc. Critical. Will the clients accept him? Will the clients be comfortable in dealing with him? Because the clients that you have nurtured over 30, 40, 50 years are used to a particular style of working, are used to personal attention that you guys have been giving to them, are used to the fact that you are available on a beck and call. If the call comes in, you will pick up the call and you will reply. And we will all realize, and we will all in practice will find that clients who have been with you for such a long time tend to become friends, and you tend to become, your relationship goes little beyond your client relationship, and therefore and thus the pressure to work and deliver for them is that much higher. So it is critical to make sure that the successor that you're trying to bring in has the wherewithal to understand these key parts of it, and then are able to, then you can probably initiate a dialogue with them to try and understand that what we need to do in terms of our successor planning. Now, it is easy if you are wanting to pass on your practice to the next generation in your family. It is easy if you have a resource who's been with a fair number of years with you in the firm or in your proprietary concern that you want to pass on the practice to. But it is difficult to find somebody from the outside who can come and take over your practice or your proprietary concerns, meeting the parameters that I just discussed. So for the sake of the paucity of time and in terms of where this conversation can go, I'm going to pursue the conversation that you're trying to find in your successor planning a firm or an entity or a third party to come and take you over. Now, the best way to do that is to make sure that you, and as Praveenji said, you must start the process 3 to 5 years before you want to get into it. The process of transitioning is a very long, tedious, and tough process. So please start 3 to 5 years in advance if you want to do it. And if you are trying to bring in third-party people, or if you're trying to bring in an external person, then please move towards the 5 side rather than the 3 years. 3 years is okay if you're trying to bring in somebody from the family, or you're bringing in somebody from the firm. Now, when you have decided in terms of your successor, you need to make sure that the dialogue with them commences. They understand what your firm is. They understand what the values are. You need to give them small targets. Your client introduction has to start, though the process is long and tedious. Now, what will happen? What will happen if you decide that, that I need to move on and I need to do something else? And going back to the start, when Atulji said that there are these startups with $1 zillion valuation that are happening, is that how do we monetize our CA firms? How do we make sure that we continue to our legacy that we have created over the number of 30, 40, 50 years continues, and I am not transferring my files to my key employees or friends or whatever, but I am trying to make sure that I make some money out of the 30, 40, 50 years of hard work that I put in. Now, for that monetization to happen, it is critical that you start documenting things in your proprietary concern, however small you may be. You start documenting small things like who your key employees are, what your revenues are, where are the revenues coming from, which vertical is your strength, how much revenue coming from that, what is your recurring revenue, what is your non-recurring revenue. You need to document that, because whoever is going to pay you money will have these tough questions that you need to answer. Now, what will happen if hypothetically there was a firm which is 30, 40, 50 years old, the proprietor or in some cases the proprietor has a partner of a very small percentage to make sure that it sounds like a partnership concern. And this firm approaches, let us say for the discussion, to Atulji, that I'm looking at cashing out. Now, what will Atulji tell him? Then you first tell me what your core strengths are. You tell me what your revenue verticals are. You tell me what your breakup of your clients are, who your top 10, 20 clients are, what is the revenue that they are contributing. And critically, the person who is trying to acquire the practice will also want to explore that how can he extend the relationship that you have with your clients in terms of revenue generation from them. Now, hypothetically, the said client that Atulji speaks with is a private limited company, and the client and the CA firm is doing their audit and their tax work, representation, etc., etc. And Atulji finds that there's a great opportunity to get into the GST part of the business, which this proprietor not gone into, not because of any other reason, but because of the fact that he is limiting his practice to the core competence that he has. He does not want to now get into GST. It's a new topic. I'll have to create a team. I'll have to spend money. I don't want to do that. So whenever the external person is coming and looking at acquiring the firms, it is critical to ensure that documentation of everything is available with you. And I can tell you what I've seen on overseas, especially in UK and USA, this is a very, very prevalent practice. It is an extremely prevalent practice of CA firms monetizing their practices when they have reached a point in time where they are looking at cashing out. Now, what will happen? Now, if you find the person and you have an interest, now the question that we all will want to know is, what is the value that I can derive from my firm? The value that you can derive from your firm will be dependent upon multiple factors, including what your recurring revenues are, non-recurring revenues are, your strengths are, your key employees are. Will the key employees who are handling the client stay with on, or will they want to move? How will the valuation happen? The negotiation of valuation is very, very tough. You will that my revenue is this and I want a multiple on my revenue. The person who's acquiring you will say that your revenue is so much, but out of this revenue, this particular portion of the revenue is either non-recurring, is a one-time revenue, or this is a portion of revenue which is exceedingly out of sync to my acquisition target. Let's say if you have proprietary concerns, maybe doing 500,000, 2,000 income tax return filing for individuals. Now that itself is even though you are filing returns on a year-to-year basis, and you might consider that as a revenue of a recurring nature, but you have to bear in mind that the person who's acquiring your practice will say that these are relationship-driven returns that you are filing. What is the guarantee that this relationship will pass on to me? That guarantee is very, very tough for you to give. And therefore, what will happen is in the process of negotiation, you can always come back and say that whatever is the agreed value that we have of the firm in terms of the multiple that we're going to derive, we can look at a staggered method of ensuring that our payments come in. There will be a certain amount of money that is going to come to you when you're selling the firm. There is a certain amount of money that is going to come to you on milestones. And then if the transition of your employees, of your clients are 90-95%, you will then have your cream and vanilla at the end of the 2-year, 3-year tenure, whatever is the negotiated time that you have for your value that you have created. Now, this value creation of the firm is critical. So the more you document the process, the more you ensure that there is transparency in terms of the acquirer in understanding what your practice is, in terms of what your revenue streams are, or what your technology processes are, what your employee capabilities are, the easier it will be for you to negotiate a value for your 30, 40, 50 years of hard work. Please bear in mind today, even in India, there are entities that are specializing in these kind of activities. There are very few and far between, but there are entities who are helping CA firms in finding a buyer for themselves, or CA firms in finding a seller for themselves. So this prevalent practice of overseas is now, we can see it is filtering into India. And if you are in that thought process, please take the time and understand that this can be done in India today. Thank you very much. With that, I would like to close this.
Thank you, Vikasji. I believe that you rightly touch upon the point which I shared, that in case you are not able to grow, or you are having some type of challenges are there, so then how we can have the succession planning. Friends, before I take up the questions, I have around 30 questions. Some of them are very relevant to be discussed here. Before I move to the questions, if I sum up the sessions given by the honorable two very eminent speakers, Vikasji and Praveenji, that I just give a 10 mantras that what they talked about. So maybe you can have the noting of that. The first one, the Vikasji mentioned that it should be a process-oriented approach in our firms rather than the clients are person-oriented. So we should have the serving to the clients based on certain process. And in case it is process-oriented, then it will be easier that we have a succession planning as compared to the 1,000 returns I'm filing, or 1,500 returns I'm filing, or I have a client with the 40 years connected with me. Is always difficult that will be getting migrated to the new person that who will be taking over the firm. The second one, which the Praveenji mentioned, that let's have the standard operating process in the organization, made with the knowledge sharing, made with the HR, made with the other activities, so that you have a systematic plan, you have the value system, you have a SOP system available in the firm, and which also enable that in case we are looking for a succession planning, that helps us. The third one, they talked about that even I discussed in person, that they discussed about the good amount of record keeping, that how we are maintaining our records. The EDP which Parveenji mentioned, I will say it's a way that, okay, how you will be conducting the audit, not only, but also how we are maintaining our records. Because maintaining the records on a cloud environment or in a stored in a very, I will say in a easier way, that it's very, very important, because ultimately we all chartered accountants deal in the data, and that's very important that the entire data is available whenever it is required. The fourth one, they talked about the delegation, the rotation of work, because unless, in case only one person is doing that job, in that case, the succession planning becomes difficult. Because if you have a policy of delegation, you have the rotation of work, then the client will not be sticking to a particular one person, and the succession planning will be much easier as compared to that we are normally looking. Then they talked about the good team. The Parveenji mentioned about that in case you have a good team, Vikasji also discussed that if you have a good team, then the succession planning, because even only the proprietor is getting changed, the team will continue to work. So in case you have a good team, the very good engaged team is there, and you have a low attrition, low turnover or labor turnover, then I believe that it will be easier that somebody is taking charge of the firm in case we have a complete delegated environment, SOPs are there. They also talked about that even they have not touched this aspect, but I can just tell you that the payments, how the payments are flowing. So whether it's more the digital payments we are getting, because that will only be, I will say, evaluated when you are looking for the goodwill as compared to the payments which are not the digital payments. The third one, that the recurring revenue will bring the goodwill. So it will be only the recurring revenue, and which is not person oriented. So the process oriented recurring revenue should be the key. So there should be inverted comma words, that I should have this much of a recurring revenue with the process orientation. That's the key, that we will be having a valuation which we are looking for. That eighth point he mentioned about the perspective, that how much years perspective should be there. So I believe that in totality it is a 10-year perspective. 5 years that you will be starting the making your firms ready for the succession, and 5 years post succession support system is required, that you will be continually engaged with the successor, that you will be getting the transition process is quite smooth, because as he mentioned that the valuation goodwill, whatever we are talking about, will be based on the success, that the milestones based. So it's very important that the 5 years down the line, I have to be there with the firm to have achieved all the milestones which we are talking about. He also talked about the specialization versus general practice, that in case your practice is more of a specialization, then it's always, I will say that the succession will be of a different perspective. In case the general practice is there, then the succession planning will be altogether different. So you have to choose that how you are planning your firm. And finally, the 10th point, that is the goodwill, how you will calculate the goodwill, is purely on the super profit vis-a-vis the top line. That is a percentage or a multiplier factor with the top line, that you will be getting the goodwill, whatever we are talking about. So I believe these were the 10 takeaways, the major takeaways, I will say. Vikasji discussed a number of other things as well. And I believe the Parveenji and Vikasji has justified the topic, because it's a first time ever discussion happening on the succession planning, and more we will grow, more mature discussion, and more, I will say, the introspection will come into the discussion. And I believe that will bring new dimension into the discussion. Friends, we have the good amount of questions with me. The questions are coming because we have a large number of members who are attending this program. So let me take the questions in around 20 minutes time, which is available to with us. And then I will request our Honorable Vice Chairman of the committee to offer a concluding remarks. First question, which I will answer myself, because that's the area, and I request Parveenji and Vikasji in case you have the answer. But since I am into the ICI, so I am aware about the answer, and that's very, very important question, Vikasji and Parveenji. Can spouse or son of a deceased CA partner take royalty on annual income receipt on recurring basis from a CA firm? So unfortunately, we witnessed that in the Corona period, we lost a large number of chartered accountants in the Corona pandemic, and the son or the wife, the spouse is not a chartered accountant. There is no succession planning as such. Now somebody else So how they will be able to take the benefit of the firm which established 40 years down the line, and now suddenly this happened. So in that case, I just wish to update my members, because there is a question from Deepak Jainji from Delhi. So I just wish to update you that in the ICI, there is a specific mechanism available wherein the new person, say for example, a firm X is there, X and Associates is there, and now the Y want to take over that firm because the X is no more available. So in that case, the Y can submit enter into an agreement with the spouse of the X, and that certificate can be shared with the MOU. That agreement can be, Goodwill agreement can be shared with the ICI, and once the ICI will approve, then the Y can submit a Form 18 on the SSP portal, so that the X and Associates now will have the new owner, the new proprietor in the name of a Y. And in that case, there will be a Goodwill agreement wherein a particular amount which will be pre-decided. It will not be a contingent. It will not be based on that, okay, whenever there will be a revenue, they will get a percentage. As per the present norms, the Y has to offer a Goodwill amount which will be given either in a one installment or in the multiple number of installments to the family or the spouse or the son of the X, which is no more with us. So that's the way which is available in the present scenario, and that has to be filled within 1 year. So it's very, very important that in case X is no more with us because of some pandemic or some other some unfortunate event, then it should be completed within 1 year of that happened. So that's the answer to the question which is being raised, and I believe it's very, very important question in the present context when we see this kind of painful events happening around us. Another question of Ruchin Singhal from Code Dwar, maybe Code Dwar. I believe that Ruchin Singhal is from the Code Dwar. He is asking a question from Vikasji to you, that how the valuation of a proprietorship CA firm is happening. So though you have answered this question, but maybe for the next 60 seconds, once again, you can give a specific answer to this question. You are on mute, sir.
Sorry for that. The valuation of a proprietary concern will be driven by the top line. The top line will have components in it. You will have recurring revenue component, you will have non-recurring revenue component, and you will have vertical wise component, audit component, tax component, process outsource component, consulting component. So the larger your recurring revenue is, the larger your valuation gets. And if your recurring revenue is coming from one vertical itself, then because you have vertical specialization and you have a large revenue coming from that, you will find buyers who are looking at that kind of vertical, and you will get a different valuation. If you have revenues from all verticals, but they are recurring in nature, you will get a valuation. But if you have revenues which are non-recurring in nature or one-time in nature, your valuations will dip.
Thank you, Vikasji. The next question is there. This similar question was there when we talk about the future readiness. So we have a question from Bellary. Sir, request you to deliberate on the small firms located in Mufsil and now wish to have strong succession plan, so that SMPs located in small places also would get into the proper planning to gear up for future readiness. Thanking you for arranging this webinar. So I believe that we have discussed this in length. So Parveenji, you want to say something fresh on this?
So I think the whole discussion in last 1.5 hours is roaming around this particular issue. And my presentation was also roaming around that how in very, very small town, how a practice can be built up and how, you know, you can create something of significance while remaining in the smaller town.
Thank you, Parveenji. We have a questions, though we have again answered the question. This question is from Chennai. Muthu Kumar is asking a question, need some inputs on the succession for LLP family audit firm. So I believe that there are the family members who are the partner in the LLP firm. So he's looking for a succession planning that, okay, how it should be. I believe it's purely that the family members will be taking over in case somebody is looking to exit from the firm, and which answered by Vikasji or Praveenji in their deliberation. So I'm not touching this question, sir. The next question is again a question which I may answer, or the Praveenji may answer as well. Can audit appointments continue transferred to a buyer of the CA proprietorship firm after his death? So, Praveenji, would you like to give an answer? Otherwise, I have answered that question because you are taking a Form 18 into the, so it's a changeover of the proprietor. Praveenji?
Yeah, I think an intimation and a permission from the institute, and the firm will continue to remain as auditor.
Yeah. So in case we are following the guidelines given by the ICI as given on the website, in case we are filing a Form 18, the new person is filing the Form 18, which is permitted by the ICI with a goodwill clause of the spouse or the deceased or the legal heir, then I believe that the firm will continue, and all the assignments allotted to that firm, because the allotment is there not to a person but to a firm. So in case the firm is continuing, meaning thereby automatically the assignments will also continue. Then there is a question from Vijender Kamath from Shimoga. What the future of CA firm in terms of artificial intelligence, regulatory restrictions on individual or proprietorship firm in Mufsil area where exposure is there, no scope for corporate or LLP culture business entities. So Vijender ji is asking a question from you, Parveen ji, that we are from a small town. Artificial intelligence is taking over our routine and the repetitive jobs. There is a regulatory restrictions. So what is the, we don't have any corporate or corporates in that particular area. So how we have to take it forward?
So I think I can share with you one experience of mine. We had gone to, so when it was in the year 2011, when UK and European Union, they were debating and implementing IFRS. So there was a program which was held in one small town, and we went and started making a presentation about what IFRS is and how subjectivity is, what is current, non-current asset and all. So one person stood up and said that, sir, why are you wasting our time? Not even one client here is implementing these kind of standards. So we are not interested. Fast forward 10 years now. Every listed company is reporting their numbers in Ind AS. Every private company above that threshold limits is reporting in Ind AS, which is nothing but IFRS only. The whole company law has changed. And those people who had learned at that point of time what this new change is coming, they are very, very comfortable, and they are able to carry out these audits and these assignments. Now we are sitting again on the same stage. We are talking about artificial intelligence, machine learning, blockchain. We are talking about, these accounting will get replicated. It is important for all of us to understand that we need to embrace those changes which are coming our way. We cannot remain the same auditor which were doing manual ticking and were doing. So we need to embrace the change. We need to learn these new techniques, and we need to learn audit tools. I know, a very close friend of mine, of course, is member of the council also. So from a small town, that person is expert in audit tools, and many of the CA firms, they go to that person that, okay, we need your help in doing the bank audits. So you have to understand that the change is coming, and it's a constant thing. Change is the only constant thing. You need to enhance your skills in order to embrace this technology and in order to embrace the changes which are coming your way. So you need to learn new things. There are a lot of certification courses of the institute, like forensic audits, new language learning, and all those kind of new courses are there. I would very strongly recommend that please keep upgrading your skills and learn these new techniques and become specialized in one particular area. And then whichever place you are sitting in, nowadays it's a different era altogether. You will be approached by people around for that particular specialization work. So do not lose heart. I mean, there is always an opportunity for you to be expert in one area, and there will be a lot of value, to that knowledge which you will be gaining. So I would recommend that don't look at only the audits. You can be expert in audit tools. You can be expert in GST in one particular area. You can be expert in company law matter. Pick up one area and become expert and write your articles and get yourself published and let yourself be known in the fraternity. So you will be in demand. So it's not that only, those traditional things will work. Things will change, but we need to embrace those changes also.
Thank you, Parveenji. The next question, rather than a question, a suggestion is there. Please suggest that the creation of goodwill of a proprietorship firm while converting to partnership firm. Yes. The question is, a chartered accountant while converting his proprietorship firm into a partnership need to add that on his resignation or death, his wife to receive a certain percentage of gross receipt, and the same clause to be adopted in all future recasting the firm. So I believe that this is the suggestion, more of a suggestion rather than question from our colleague. But in the interest of the members at large who are listening this program, I just read the suggestion given by the one of the participant who is participating. Then there is a next question that please suggest the creation of goodwill of proprietorship firm while converting into the partnership with the draft clauses. So Vikaji, he is asking that I am converting the proprietorship into a partnership. Give me the some draft clauses. So maybe you can give us some idea that how to create the goodwill clause into the firm.
See, if you are, first of all, if you're moving from a proprietary concern to a partnership concern, is it from the purpose of succession planning or is it from some other purpose? If it's for the purpose of succession planning, then what is the value that the other person is going to bring on the partnership firm? That needs to be evaluated. If it's for the purpose of your own practice, then would you want to create an asset in your book, which is anyway you are the partner of? You will need to find ways of differentiating in terms of succession planning and your business expansion. There's a fair difference.
So I believe Vikaji is trying to give the answer. Just to give another word, that in case it's somebody is coming as a profit sharing partner, then you have to first assess the goodwill, and whatever the share you are giving, based on that you can ask for the consideration for that goodwill part which you have calculated. In case it's a succession planning, then altogether you will be because then again the same point is there, but in that case there will be a different way that you will be calculating the goodwill. So that is the point which I believe that is the takeaway from this. The next question is, we have already answered. Is it legal to make an arrangement to pay a certain amount to the spouse of the deceased partner in a firm? It is enforceable in a court of law. It is a practical proposition. As I answered that in the question, in the ICI website also, there is a clause which there is a provision which agree on that particular part. The next question is there that what would be the best way to plan taxes in case of CA firm want to transfer its profession to a new partner along with a goodwill and office premises. So they are looking for a tax aspect. The Parveenji, if you wish to give the answer, or Vikasji, that with whether any tax impact will be there in case of a succession planning, that you are looking for a consideration for goodwill. As far as the GST is concerned, I can answer. Since it's a going concern, so there will not be any GST on the goodwill part. Income tax you can answer, sir.
I'll answer. I'm not a tax person, but I will answer that always remain on the right side of the law and don't take aggressive views. And rest I will leave it to all of you are chartered accountants, so you know how tax department works. But I would recommend that remain on the right side of the law.
Vikaji, a question is there: can new partner entering into the profession take over the immovable asset of the previous firm along with the ongoing business profession of CA firm?
So once you are taking over the ongoing business and profession of the CA firm along with assets, you are basically coming as a successor of that firm. So once you're coming as a successor of that firm, then within the parameters and guidelines of what institute prescribes, You can take over that, but you will again need to understand how you're going to value that. The valuation is a different thing than from taking over the assets and the business of the firm.
So the next question we have already answered. There is a question from Delhi by Rachit Jain, that how to value a CA firm for the purpose of buyout. I believe that we have answered, but again, it's purely on the case-to-case basis. But the methodology at the 44,000 feet level has given by Vikasji to all of us. The question number 20, the next question, I have received 31 questions, so I'm just reading the 26th question, because certain questions are either they are just giving the some thoughts that okay. The question number 26 is, we are 3 partner firm. I am founder of the firm 30 years ago. Now we want to admit my only daughter as partner. She is a software engineer. MDP is allowed now by our institute or not? I just wish to answer you, sir. So there is a question from Kakinada. This question is from the Kakinada. I just wish to share with you that the MDP with the cost accountant, company secretaries, actuarial valuers are now allowed. So it is yet to be allowed with the engineers per se. So you have to bear with us, sir, that engineers are not permitted to enter into the MDP as you are proposing. So maybe we can give a suggestion to the council of the ICI that they can consider this as well. The next question is that please share your experience. Parveenji, this is for you or maybe Vikasji as well. Please share your experience on how to retain CAs in small town where due to homesickness, CA supply is more and demand is less. They compare with package in Mumbai, Delhi, and matching them is a burden sometimes. Your motivation to small cities, young CA in practice. Parveenji and Vikasji, both of you can answer this. Maybe for one minute.
So let me go first. So see, as I mentioned, that the key in our practice is talent retention. And yes, this is a practical problem that you will have, and it's a practical problem most small cities will have, is that once the resource moves from a larger city to the smaller city, their expectations remain of what is in the larger city, but they want the perks of a smaller city. So it is critical for you to make the resource understand of what is it that you can provide to them in a smaller city, which was not available to them in a larger city. If you can put that value differentiator or the value proposition into the resource, you may be able to break him in terms of the salary expectation that he or she may have. Plus, it is not very easy for that resource to command the kind of salary that he's getting in a large city, in a small town, whether he's asking from you or from any of your competing firms there. So you will have to play that card carefully, and then you'll have to do the retention.
Parveenji, any addition?
I will flip it on the other side. I will say that if you want to retain a person, is fresh qualified, and let us say 1 year experience, and that person is demanding 10 lakh rupee of salary or 12 lakh rupee of salary. You cannot use that person to do assignments which are not that generating that kind of revenue. You can retain the staff or the people if they are able to multiply 3x with revenue, like I had shared, the direct cost, indirect cost, and the profit. So why do you need that kind of a staff? If you want to use that staff, you need to have those kind of assignments. So what I would switch over is that gun for the assignments which are high value in nature, so that if a younger person is asking a particular remuneration, you should be saying, yes, I will be able to pay it because I have those kind of assignments. So if people are able to work from home, you are able to get that work sitting in a smaller city as well.
Thank you, Parveenji. I have a question from one of our colleague, past colleague, that please share the latest data on the number of firms along with the different slabs of 2 partner, 3, 5 partner. I just wish to share that as of now, as I just checked a few minutes before, I have the, rather than having the different slabs, Sanjeev ji, I can tell you that total firms which are registered with the ICI is 87,577. And out of that, the proprietorship firm is 62,145. And the rest are the partnership firm, that is 25,432. The further breakup of 2 partners, 5 partners, 10 partners is right now is not available with me, and maybe we can share at some appropriate occasion. Sir, I have a very important question, and it's from a very senior partner. So that's actually, as I discuss you, that it's at times it's painful questions. It's, though I'm not saying that it's for him it's a painful, but I'm just saying you because always these kind of questions create a little bit disturbance in our mind. So question is from Mumbai: how to manage the generation gap while planning for succession? For example, senior partner focuses on the tax in legacy way, wherein as young partners want to drive it with technical automated way, which require technology upgrades, investments. Then how to manage such issues? Both of you can give an answer in a minute or so, sir.
So I think
we are running short of time.
So I think this is not a question of profession. It is a question in our families also. It is a question in our societies also. The younger people are not that kind of tech savvy, and they learn Instagram and those kind of things from their kids. And in our profession also, if younger generation is really tech savvy, we should really give them space, and we should really respect that people will work according to their own, and their mind will be faster, because as the elder, so it's very difficult for everyone to keep embracing the change at the pace at which it is coming. So the recommendation which I would make is that please stick to your specialization area and embrace the technology as far as possible, and give space to the younger people to do it quicker, faster, and more efficient way. I think only by respecting the strengths of those people around us will be helping in reducing that gap of understanding.
I completely agree with Praveenji. I think we all have to accept that what we did 30 years, 40 years, 50 years back, and what we created 50 years back, we tend to believe that that is the best way of doing things. We normally underestimate the capacity and the ability of our younger generation. And my personal experience is that if you allow them to flourish, and if you allow them to bring in these technology and whatever else they have in mind, in the long term, it may be more beneficial to you and to your firm or to your proprietary concern.
Thank you very much, Vikasji and Praveenji. And I believe that we answered most of the questions which are being raised. There are certain questions, but that was not relevant to our sessions. So that's why I have skipped that questions. I convey my apology to all of you whose questions I am not taking, because the questions like whether how to plan audit of unorganized sector. So these are the specific questions which we maybe will giving to the concerned committee. I can only share with you that we have received certain appreciations also. So I'm not touching those points also, because it is our duty to organize these kind of events rather than I'm reading the appreciations. I believe just before I request Sushil Bhai to give offer a formal vote of thanks to both the speakers and all the participants, I can only convey once again that it's a beginning. It's a beginning when we initiated this process, that let us think, at least to start with, let us think that, okay, how we will be taking this profession to the next level. Maybe we are developing a future ready firms for ourselves, or in case we want to move on, like for example, the Praveen Kumarji background, though it's a background only, but in case you want to live like a Praveen Kumarji who is sitting on the beach and then enjoying, because as you remember that we organized a program in 2020 with a Chad Harris, who is running his firm on a this called EV, this vehicle I'm not remembering exactly the right word, but he is driving. Caravan. So he is enjoying the life, sitting on the beaches, and then he is managing his entire firm from the cloud environment. So there may be the compulsions. There may be that we decided to move on. There may be that we want to grow our firms. So in any case, we need to have a discussion, introspection, and a lot of deliberation around that, and then how to see that how we are developing our firms in such a way that meet up the expectations. The last point which I wish to convey you, that we are sitting on the 87,577 startups. So let us have all of them getting valued, if not billions, at least for millions, so that in the hundred of millions, so that each one of us is getting rewarded for the contribution in the profession, for contribution in the economy. I'm aware that it's very easy to say, but very difficult to follow at times. But I can tell you that each one of us who are supporting the startup ecosystem and making them grow, making them bigger, why not we feel that, okay, let us develop our own firm as I will say, not as exactly the startup, but I will say that yes, there should be a valuation even for our firms. And as rightly mentioned by Vikasji, that the days are not far away when the practices followed in Europes and UKs and all, that the firms are getting merged or getting amalgamated or being taken over by somebody else for certain reasons we discussed, that will see the reality in our ecosystem as well. So thank you very much, Vikasji and Parveenji from my side, and I hand over the proceedings to Sushil Bhai, who is the worthy vice chairman of the committee, under whose guidance we have organized this program. Now you are aware that I'm getting retired from the ecosystem as a council member in just 12 days after. So maybe last goodbye from this platform to all my members, viewership into this kind of so I feel that, okay, let us, before I demit the office as a council member, let me request everybody to organize the programs like this. And Sushil Bhai happily agreed that yes, we should organize this. So over to you, Sushil Bhai, for your valuable guidance and the closing remarks.
Thank you, Atul sir. And one thing I can say is, a president can retire, a vice president can retire, or a council member can retire. But Atul Bhai is having such a position, he cannot retire. He is having present position, that is past president. How he can retire from the post of the past president? So it is not possible for you, sir, to retire from this post. There is definitely honorable post for ICI, that you are past president of ICI. And today's what I have seen you speaking in this program, you are equally taken the session as a speaker. So many queries you have answered, and all members must be benefited. And we are thankful to you, sir, being chairman of the committee and as well as the past president of ICI. You have cleared so many doubts which is amongst our members. We are really thankful for this wonderful work. We have CA Vikas Kocharji, who has discussed the challenges in succession planning for small firms. And definitely it is going to help these small firms. What are the challenges? Once you can understand the challenges, it is told that if diagnosis is done properly, then the treatment is very easy. So similarly, Vikasji has find out the challenges which our members are finding when they think of the succession. And if we can identify it, definitely solution is in front of us only. So thank you, Vikasji, for your wonderful delivery. Now I'm moving to our next speaker, CA Parveen Kumarji, value creation through succession planning. Yes, sir. We have to understand how value can be created. We are not planning properly. We are not doing it. Goodwill and all these are not properly valued. And members are not getting proper thinking towards this, how they can, in succession of a partnership firm or a proprietorship firm, even which we have discussed, how it can be beneficial for both the person. It is not for one person only who is taking over the firm. It is beneficial for both the person who is taking over the firm and who is going out of the firm, who is leaving the firm. Definitely a proper planning proper succession will definitely allow them to carry on this goodwill of the firm which is they are having. And I'm really thankful for this wonderful seminar. Rather, we should say we call it webcast. So once again, thankful to CA Atul Gupta, our past president, Vikas Kocharji, and CA Vikas Kocharji and CA Parveen Kumarji. Thank you, our viewers. Without your active participation, this program cannot be considered as a successful program. So we are thankful to all of our viewers who have joined from across the country, and keep on attending this type of program. It is definitely a value addition in all of us. Thank you very much. Thank you.